As head of BlackRock Alternative Investors, what are some interesting alternative investment ideas you're looking at right now?
Well, we've just recently launched 3 very innovative alternative investment mutual funds. So we've taken the same teams and the same investment strategies that we historically have brought to bear for ultra-high net worth individuals and for very sophisticated institutions, and we've embedded them in traditional mutual fund forms. So we have an emerging markets long-short equity strategy, a commodities long-short strategy, and a credit long-short strategy. And in each of these cases, what we've done is allow investors to be exposed to something other than what the market does. So in a typical emerging markets fund, an investor is betting that emerging markets go up. In our emerging market long-short fund, the investor instead is betting on our ability to select which stocks will go up in the emerging markets and which ones will go down in a long-short format. So from the perspective of one of our investors, he or she is able to add an expected return stream with managed volatility and a lower correlation to the overall market so that their overall portfolio can be improved.
So how does the risk associated with these types of assets compare to stocks and bonds?
The risk of one of these strategies is idiosyncratic, I would say. So it's the risk that we pick the wrong stocks to be long and the wrong stocks to be short, as opposed to systematic, that the market goes down when we were exposed to all of these stocks. I think a mistake that some people make is to say these absolute return funds are low risk. I believe they have lower systematic risk, but any one of them will have its own idiosyncratic volatility.
So what percentage of a portfolio would you recommend that an investor put in alternative assets?
That's a great question. If you were to bookend the answer to that question, you would find at the low end the typical retail investor in a wirehouse who today would have 1 to 3% of his or her assets invested in alternatives. At the high end, if you were to look at the most sophisticated institutions, the large foundations or endowments that have in excess of $1 billion to invest, they would have 60 to 65%. The answer is, for most people, somewhere in between. Again, I'd counsel working with a financial advisor, but a number in the 10 to 15% is where many of those FAs are trying to counsel their clients to get to.